trading world, price action is supreme and give real-time data, unlike lagging indicators which are derived from price action like Bollinger Bands, MACD, etc.
Let's talk about price action candlestick patterns. And one such price action candlestick patterns is Doji Candle. It is the most common candlestick pattern out there in trading. And what is Doji Candle? See, when you see a Doji Candle, it represents indecision in the market, which simply means neither buyer nor seller are in control. And whenever you see this Doji Candle, there is a high possibility that a reversal is on the card. How does Doji Candle looks like? It looks something like this. When you don't have a body, but just only wicks attached. So these are wicks. The lines, they are called wicks. And you can see whenever you see a Doji Candle, it represents there is a possibility, not a surety. It represents a reversal. So let's see on the next page also what it shows.
So here is a typical example of a Doji candle happening in the live market. Like you can see, there is a price action candles which are actually taking the market down, and suddenly this Doji candle appears after a big fall, which indicates, which I have already told you, that there is a possibility. It is not mandatory. You have to understand this concept. There is a possibility. Anyways, trading is a possibility. So there is a possibility that a reversal might be on the card. And this is what actually happened when this Doji candle actually appeared. Market actually took a reversal from here. The price action with Doji candle. So now there are a few more important price action candlestick patterns which I want to discuss with you, but I have divided them into two parts. Slide number 1 and slide number 2. Why I have divided them? So basically the slide number 1 will have all the patterns which appear at the top and indicates a downside reversal, and slide number 2 has patterns which appear at the bottom and indicates a reversal. Market will go up from here with a possibility. I have done this basically so that we can categorize them, and it is easier to learn also. Do you really have to learn all this? I would say no. Just take a printout of this and paste it somewhere near your trading setup so that you can take this as a referral also. Now, coming back to the patterns, there are 5 patterns in slide number 1. Hanging man candle, shooting star candle, bearish checkmate candle, evening star candle, and 3 black crows. So all of these patterns appears at the top of the uptrend, and with a high possibility, if these pattern comes, there is a possibility that the downtrend is starting and a possible reversal. So hangman candle, it looks like this, somewhat like a person hanging. When you see such pattern at the top of any chart pattern, it indicates there is a reversal happening and the market went down. Shooting star, these are shooting star, typical example. When you see a shooting star like this at the top of any chart, there is a high possibility that the market is taking a reversal from here. Bearish checkmate, we have already discussed this in our previous slide. Whenever the market is going up and it faces some strong resistance, which basically says that the price action candle is not able to breach the resistance, and in such case price action candle try for some time to break the resistance, and if it is not able to do that, in some time it's take a reversal and come down. So this is also very important, and from here market is taking a reversal. Evening star, this is a typical evening star pattern. Here it appears at the top of uptrend market and giving a reversal from here. And the last one is 3 black crows. at the top of the uptrend, if you see 3 strong red candles appearing, they indicates market will go down from here. All these patterns, number 1, number 2, number 3, number 4 and number 5, whenever you see them, there is a possibility the market will take a reversal from here, not a surety. Yeah, please understand. I hope you have understood this concept. So here is chart number 2 explaining price action candlestick patterns. In this, we will be seeing patterns which appear at the bottom of a chart and indicating a possible reversal towards upside. So there is hammer candle, bullish checkmate, morning star candle and 3 white soldiers. Starting with hammer candle, it looks exactly same like hammer, and this appears at the bottom of any downtrend, and when this appears there is an indication and a possibility the market will go up. Bullish checkmate, reversal of bearish checkmate. In this, market was coming down, but there was this strong support which market gave to price action candles, and after trying for some time, market actually started going in opposite direction, an uptrend. This pattern is basically called as consolidation happening in the market. So whenever consolidation happening, you know from now on what will happen. You can take your trades accordingly. How to take trades, I'll let you know in coming slides. So there was this, and this appears quite often in the market. Market was coming down, could not able to breach this support, because now you already know there was a strong support and price action candles were trying to breach it. Nothing happened. The pattern is in making, bullish pattern in making, and suddenly popped out towards upside. Morning star candle, this pattern, when it appears at the bottom, there is a possibility that market will go up. And the last one is 3 white soldiers. Market was coming down, suddenly it faced some support here, and then 3 strong candles, full body candles, these are, appears, and then market started going up from here. Very important concept, guys, and it will come very handy to you when you will paste them in front of your table and take them as a referral guide.